everyone, I'm Isabella Smith and welcome back to the first episode of my new podcast. Today I'm going to be talking about how the U.S. economy is doing by answering 4 important questions. The first question is, what is the current unemployment rate and how did we get here? The second question is, what is the recent rate of GDP growth and is the economy expanding, contracting, or recovering? The third question is, what is inflation doing and what should the Fed do about it? And last but not least, question number 4 is, what is the U.S. current account balance, deficit, surplus, or balance, and what does that imply? As of August and September of this year, the U.S. unemployment rate is about 4.3%. 4.3% is still significantly lower than long-term averages, but it's still slightly higher than the lowest levels in recent years. For example, some months it could be at around 4%. So, what caused this change? After COVID, job growth was strong and growing, and businesses were hiring very fast. Now things are slowing down a bit because companies are trying to manage costs and deal with high interest rates, which is making these levels drop. Some industries, like the tech and manufacturing industries, have seen small layoffs, but most people who want jobs can mostly find them, but sometimes it's hard for people to find jobs now. So after diving into question 1, it is safe to say that the job market is still healthy. It has plenty of opportunities, and there's a lot of things available across most industries. People are still finding jobs and companies are still looking to hire. It's just at a slower pace than it used to be. Although it's not as hot and booming as it was post-COVID, it remains strong enough to show that the economy is stable. Now let's dive into question 2. The U.S. economy grew by about 3.8% in the second quarter of 2025. Based off research, that's a really good growth rate, and it's much stronger than average. Earlier this year, growth was much slower, and it was slightly negative in the first quarter, but it bounced back up in the spring and the summer. Basically, what this means is that the economy is in an expansion, not a recession. So, why is this good? Because the steady growth means businesses are selling, hiring, and investing. The only thing to watch is how we're growing. Some of that growth came from temporary factors, like fewer imports and short-term boosts. So it may not last for this pace for that long. So what all of this shows is that the economy is growing at a healthy pace, which is a very good thing. So moving on to question 3 about inflation. Right now, inflation, or the rate at which prices are increasing, is about 3%. So this percentage is higher than the Fed's goal. The Fed's goal is 2%, but it's much better than when prices were jumping like crazy in 2022 and 2023. So although prices are still going up in 2025, it's not as bad as it was a few years ago. The Federal Reserve, which is in charge of managing inflation, has started lowering interest rates slightly after keeping them high for so long. They're doing this to try and balance things because if rates stay too high, growth slows way too much. But if they drop them too fast, inflation can rise again. So what this means is that inflation right now is a little high, but it's headed in the right direction. The Fed just needs to make sure they're moving carefully and making the right decisions. So now we're moving on to the last question, question 4. The current account measures how much the United States invests and trades with other countries. Right now, the United States has a trade deficit, meaning we import more than we export. Right now, in 2025, the deficit is around 3 to 4% of GDP, which is normal for the United States. This is not necessarily a bad thing. It just shows that Americans buy a lot of foreign goods and that foreign investors are willing to lend money or invest in the United States. But if the deficit gets too big, we could run into a few problems. It could cause debt or weaken the dollar. But as of right now, the deficit is manageable and it's not a major concern. So after answering all of our questions, what's the big picture? Unemployment is pretty low at around 4.3%. We're showing strong expansion at around 3.5%. And inflation's a little high at 3%, but it's not terrible. And right now, we're in a normal trade deficit, not a crisis. So overall, the United States economy is doing fairly well. We have room for improvements, but it's not that bad. It's growing steadily, prices are calming down, and most people who need a job can find one easily. The main challenge is keeping inflation under control without slowing things down too much. So thank you guys for watching the first episode of my podcast. I hope you enjoyed and learned a few things about the United States economy.